Hey everyone, I found someone, an expert trader, the founder of Live Traders. His name is Anmol, that's Anmol Singh, Singh. Anmol Singh is the founder of Live Traders, and he represents a point of view that is like mine. He doesn't have quite the years as me, of course, but he's already gotten the joke of how trading goes, and I think a person can learn a lot listening to him. This is not financial nor professional advice. This video is for entertainment only. Here he's being interviewed by Kitco News, and the title of the video on YouTube is the market crash will continue.
Anmol Singh, founder of Live Traders, joins us today to talk about the very volatile stock market and the crypto markets that we've been seeing. Anmol, welcome back to the show. The stock market, as we're speaking today, has more or less stabilized today on Tuesday, but that wasn't really the case yesterday and a few days before that. So summarize for us exactly what happened in the last, not just few days, but last couple of weeks to months. As you know, risk assets, including cryptos, have been falling steadily since November.
Yeah, David. So I remember last time we were talking, we had talked about something known as a PE compression, which I talked about, that we're going to be entering that phase known as PE compression, where the valuations get crushed. And we were, I think, talking about real estate stocks and tech stocks, how they're going to be hammered in the previous episodes. And all of that for me was all based on technicals. Now, you could put a variety of reasons, which are inflation, rising interest rates, but for me, it was all technical. So as you can see the chart in front of you, this is a chart of the S&P 500. This is a weekly chart. So as a technical trader, all we're literally doing is, this is an uptrend. You can see that it's above all the moving averages. It's riding the uptrend. Once this uptrend was broken, I think that's when we were on Kitco News last time, where we talked about that the trend is changing. There's a warning sign, so be careful. And right over here, when the market sold off, recovered extremely hard, people were back to bullish again. And technically, we call that a retest and failure, where you break a level, you try to retest it, sellers come back again, and you get a move down. So to me, honestly, I don't even think the market's done. The markets are down a good amount, but I think they have a long way to go still.
What makes you say that exactly? Why do we still have a long way to go?
So technically, I'll show you a few charts. This is known as market cycles or market stages. Stage 1, stage 2, stage 3, and stage 4. So I'll show you some examples of that using a monthly time frame. And you can clearly see, if I could just go ahead and delete my lines over here. You can clearly see zoom. A sideways pattern is what we call stage 1. And then when it enters an uptrend, we call that stage 2. Usually in a stage 2, you get extremely high volume and you get a reversal candle, which happened on Zoom. And then you get a stage 4 decline. So everything, no matter if it's cryptos, stocks, markets, they all follow this market cycles. So I'll show you just a few more charts really quickly. So just notice this angle, how it went up, V-shaped reversal back down. Let me show you another one. Cathie Wood Ark, look at this. Stage 1, stage 2, stage 3, and then a stage 4 decline. Here's a few more. Roku, stage 1, stage 2, stage 3, stage 4. Even Bitcoin, right? Even Bitcoin, stage 1, stage 2, stage 3, and then back to a stage 4. So everything technically moves in the same direction. So you have to really...
ARK, that's ARKK, has been especially brutally hit. It's just almost unbelievable. And Bitcoin, we may have the opportunity to buy it below 25,000, which just seems unbelievable. But this is the warning. When you get the risky assets going down so much that everything is crashing, and the more speculative it is, the harder it crashes. It's now what I call an everything crash. And I've been saying this for 2 months.
Pay attention to technicals. Fundamentals are great, but in a market environment where there's high volatility, you got to be in the right side of the market, and technicals enable you to do that. Teladoc is another great example of that. Recently got crushed on earnings, stage 1, stage 2, reversal candle, back to stage 4. So just following these basic technicals, people could be on the right side. However, I will say some of these stocks like Teladoc, even Cathie Wood Ark now are at the bottom of their stage 4s. which get into the territory where they potentially become viable again.
Okay. I want to go back to the S&P 500, please, and just look at the broader market. So you were telling us about indicators. At what point, Anmol, at what point do the charts tell you or indicate to you that a downturn is about to happen? Could these moving averages, be a predicting indicator for a potential inflection? As you can see, the markets have steadily risen until its peak last November, and then we've seen a sharp drop ever since. So I'm just...
The best indicator that a market is going to go down is that it's been going down and it gathers momentum. It's like a freight train coming down a hill, and you don't want to be standing in front of it at the bottom of that hill. It strikes a person with transcendental awe if you've ever been involved with the stock market as long as I have been. And I know this feeling, and I've gotten it now. I haven't seen the full flush, and we have to get that final flush where nobody wants to buy stocks, and people are still buying the dip. ARK Fund recently had an inflow, so hope isn't given up, and I will be among the first to jump back in, but I'm going to wait till it starts to go up meaningfully and we have some good fundamental news to have hope. Right now, there's no reason. Everything looks so bad. Geopolitically, economically, socially, just things are not coming together. And I think it's going to get worse towards the end of this year because Russia's digging in for the long-term battle with Ukraine. And that's just kind of a nightmare scenario. And right now, the Senate is debating whether to send another $40 billion of aid over there, which is unprecedented. And I never imagined that we would be funding Russia's neighbor, Ukraine, which was considered almost a part of Russia, that we would be funding Ukraine to fight Russia. It's the Ukrainians really are fighting for us all right now.
Just wondering whether or not this has more or less been telepathed by the graphs.
Yeah, I think that the early warning sign for any investor is drawing a trend line. So you can see my blue line over here, how we were hugging that trend line. Every time we came down to it, we bounced. Every time we came down to that line, we bounced. Here we did not. So that was the first sign as an investor. It's not a sign to get out. It's just a sign, hey, something is changing. Let's keep an eye on this. And when you finally come down and you retest and you fail to make a new high, that's your sign that now it's in a downtrend. So now you get lower highs and lower lows, lower high, lower low. You're going to get another big bounce because in bear markets, the biggest bounces tend to happen in bear markets. And those bounces make it feel like the downtrend is over. And then you get a move up, lower high, and another lower low. So that's the trend that the market follows. And to me, this market, I think S&P, if I was to make a bold call, probably goes to 336, 340 on the SPY.
It's full of fake outs.
Okay, so what exactly is that in terms of percentages from our current level?
From a current level, I would say probably another 10 to 15% we still have to go down on the SP5. And if you're talking about the NASDAQ, maybe another 10, 15%.
Okay, and what's going to happen after that?
I think what we have to wait for, if you're looking at as an investor and you're looking to buy the dip, you have to wait for some sort of a capitulation where the weak hands get shaken out. You get a big down move. One of those scary days where everybody's scared, you get a big move down. Those are the days where you have to look for a reversal, or known as a capitulation. Usually that will be accompanied by high volume. As you can see here, we extremely went down, high volume came in, we bounced right back up. Extreme move down, again, volume picked up, as you can see on this candle, we went back up again. Right now, I'm actually not seeing the volume pick up, which makes me think we are not near a bottom just yet.
All right. Suppose we are on our way down in terms of market pricing. And suppose the S&P 500 falls not 10, 15%, but maybe another 5, 6%. At that point, suppose there's some good news in the market that might change your mind as a trader and say, hey, you know what? Now's the time to actually buy the dip and get long, even though the markets haven't reached my downside target yet. What would that good news have to be, Anmol?
So, David, like I've been trading for 12 years. One thing I've realized is to trade what you see and not what you think. So I could have opinions, I could look at the news, but if the price is going down, then it's going down. None of my opinions would matter. So for me, I would need to see the price get back above those moving averages, get back in an uptrend. When the uptrend is established, now it's a safer bet to be involved in the markets. So to me,
Amen. You don't try to hit the exact bottom. That is impossible. But it isn't impossible to catch an uptrend. And if you try to catch an uptrend and it starts up, but then it starts to dive again, you can get out before it takes the major dive usually. And so you just end up flat and you're not hurt for the worse. But if you try to dive in too early and it's got another 10 to 20% to go, and let me say, him saying there's only 10% left to go, that's being very optimistic. I think that's virtually guaranteed at this point in my mind. I think it could go down 30%. And that sounds unbelievable, but that's what capitulation is. The unbelievable happens.
Price is the only thing that pays, because I could have opinions. I could love a stock. I could love a currency. I could love a country. But at the same time, if the price is going down, that's the real measure.
I'm sensing like you're saying that the price is already indicative of all macro news. Is that a fair assessment?
Correct. Everything is priced into the markets, and but markets are usually a bit lagging, meaning the news comes in, you always see the reaction before the news happens, right? And then there's a follow through on that news. So to me, I think that there's going to be more bad news, because I think in this environment, the good news really has to be a good news. Or any average news that in previous environments would have been considered a bullish news might get sold into. And you're seeing that every bounce these days are getting sold into, and people are using these bounces as an opportunity to lighten up. Every bounce is getting sold. Today was a great example. Markets actually gapped up today, right? But then sold right off and made a brand new low. So these rallies are getting sold. I don't think any news can really fix this issue at this point. I think we do have to get a price correction. Price correction has to happen. There's only two ways it can happen: price correction or correction through time, where we stabilize and go sideways. Those are the only two ways prices can correct, and a correction has to happen before we can continue to go back up again.
That's interesting. If you're so convicted that the price has to fall more before we see a correction or rebound rather, and there's nothing really that the news can do to change your mind, what are you doing right now to prepare for this drop? Are you shorting the markets? Are you staying on the sidelines? What's your play here?
So, yeah, good question. So in this market, I've actually chosen this decline more as an opportunity to lighten up and not be involved in the market. So back in January, at least in my newsletters, I sent out an alert. I said, not really comfortable holding anything, might be too early, but I'm choosing to be safe. So I exited all of my long-term investments, early this January. And I think there was a tweet on Twitter I made as well, which I think you retweeted, which was about getting out of the markets and how people these days have been spoiled over the years to buy every little dip and have it work until the real dip keeps dipping. Yeah. I think a lot of smart people are going to get caught off guard. And you can see that right now with a lot of funds like Gerber Kawasaki and Cathie Wood Ark, like trading at historic lows with still more potential room to go down.
It is so true what he is saying. People have to reach the capitulation stage, and it's not fun. And we see it happening more in slow motion. And this is always the worst kind of crash. The slow motion ones always take the heaviest toll because people keep buying in and propping it up, and other people then prop it up. And you get these short-term bear rallies, which can be just wild. I've been trading them using inverse funds. And I'm going to show you next time how this week has been for me. And it's been a wild one. It's like being in a rodeo and being on a bull named Fu Manchu. You hope you can make it for 10 minutes, But it turns you into a short-term trader because this market is very short-term. But I'm liking to buy the inverse funds when they go down, when there is a rally, and I'm just keeping the ones that I bought in the past, and I'm buying the dip on inverse funds, and this works because the direction of the market is down. You always have to have the correct direction in the market. Otherwise, you're just lost, and you don't want to be lost in this market. You want to be following the trend. Let the trend be your friend. And good luck to you. And I will plan to see you in the future. Of course, this is not financial advice because I don't know your personal situation. Every person has to be responsible for their own trades, and you want more than one source of information. So educate yourself on trading if you're interested in this, and make the best decisions you can that fit you in your personal situation. And you're the only one that can make those choices. Thank you for listening and watching. Be sure to hit the like button. Be sure to subscribe. Hit the notification bell if you want to be interrupted in the middle of the night. And I will plan to see you in the future. Bye-bye.